Hi everyone, welcome to my YouTube channel, and today we are talking about money market funds, and these are a form of pooled investments, or what we call collective investments. And when you are a member of a money market fund, then you should know that the money you give to the investment company together with those of many others, because the investment company will pool funds from many different investors, will be invested in debt securities that are short-term in nature and have a maturity of 1 year and less. And one of these investments that you may find in a money market fund is treasury bills. There is also commercial papers, and there is also certificate of deposits. And for treasury bills, we know they are issued by sovereign governments like the Kenyan government, and they have a maturity of 1 year and less. Commercial paper are issued by highly creditworthy institutions and have a maturity of up to 270 days, while certificate of deposits are just deposits with accredited financial institutions or credible financial institutions that will give an investment management company that owns the money market fund a better rate for the fact that it has now a larger pool of money that is investing. Unlike if you took your 10,000 to the financial institution itself or the bank, you realize that for the firm it will get a higher rate of return than you would. And that's what they capitalize on when they invest in deposits. And then, of course, when they invest the money, because they're providing a service to you, they expect to be compensated in form of what we call management fees. And sometimes they levy a fee called administrative fee because of all the service they provide to you when you need your money, when you need to join, when you need to leave. So there are a lot of administrative work that goes on, and so sometimes you have to pay for that. Of importance to really note is that money market funds do not have what we call initial fees or entry fees, or sometimes what we call front load fees, whereby when you are joining you are required to pay a fee. So money markets rarely have such kind of a fee because generally they are short term, and even their management fee is also lower compared to other types of funds that we are not discussing here today. And also they promise what we call preservation of capital, whereby the money you put in, there is a higher degree that it will be preserved. And another thing you need to know is that money market funds accrue interest on a daily basis, most of them, and at the end of the month that money is credited to your account, whereby the money you own keeps on growing, because then you are having interest loaded to your initial capital, and then the entire money is earning you further interest. So you find that interest is earning interest, the concept which we call compound interest. So you may end up, if you're patient enough and invest for long, to have a very huge funds while you started from a modest level. So it's also important to know that if you want your money, the money you've invested in a money market fund for any need that may arise, then you just need to request, and within 2 to 6 days of giving notice, then that money will be credited to your bank account. Of course, that will vary with different kinds of companies or providers of money market funds, but like for one, I'm an agent too. Once you request your money between 2 to 4 days, then you have it. You'll have that money credited to your account. Another thing that I would like to say is that money market funds provide what we call diversification benefits, because then if you own shares, bonds, real estate, and you add to it money markets, which are low risk, then what happens is that your overall portfolio risk is reduced, so that if any one of the investment is not doing good, you may find others doing well. And for me, my recommendation as always has been, for any person who would wish to build a an emergency fund that is easily accessible, then money market funds would be a very good starting point. And some of these rate of return they give will range between, let's say, 6% to around 9-10%. So that if you find an outlier giving you 20% or 18% in an environment where treasury bills are giving, let's say, 8%, then you should know that it is coming along with higher risk, regardless of whether you can identify that risk or not. So also beware that risk and reward go together, and you should not pursue return only and then ignore risk, because then you could be chasing a return and lose your principal. So I really want to say, if you want to open such an account, say I'm an agent one, you can contact me, or you can go directly to one of the many firms I've told you. These firms you can find them in the website of Capital Markets Authority. You can go directly to those firms and open an account, and then you can begin experiencing the benefits. So that's it for money market funds. Should you have any question, kindly feel free to ask me in the comment section, and I'll try my best to reply. So thank you for your time. I wish you well, and see you in future videos. Thank you very much.